I realize some people may find the ins and outs of tax law a little tedious, so allow me to spice this story up. Instead of an audit, imagine this is a showdown between two warriors in the most brutal and exciting form of combat there is: chess.
You are remarkably well versed in the tax code.
Thank you.
It's nice of you to do your parents' returns for free every year.
Oh, I don't do it for free. My dad buys me a model train afterwards.
Interesting. So you accept payment even though you're not a licensed tax professional? In clear violation of federal.
Excuse me, I need to use the restroom.
Hi, I'm Faiz. I will explain more about tax audit and begin with an introduction. The tax audit is an examination of a taxpayer's business records and financial affairs to ascertain that the right amount of tax should be calculated and paid according with laws and regulations. The objective of tax audit: first, encourage voluntary compliance with the tax laws and regulations. Second, ensure that a higher tax compliance rate is achieved under the self-assessment system. Third, educate and create awareness of taxpayers towards their rights and responsibilities under the provisions of the investment tax allowance. And lastly is ensure that the correct amount of income has been reported and the right amount of tax has been paid in accordance with the tax laws and regulations. There are two types of tax audit that Inland Revenue Board of Malaysia carries out, which are desk audit and field audit. For the desk audit, a desk audit is held at the Inland Revenue Board of Malaysia office. Desk audit are normally concerned with straightforward issues or tax adjustment which are easily dealt with via correspondence. A taxpayer may be called for an interview at Inland Revenue Board of Malaysia office and further information is required. Generally, a desk audit involves checking all information of income made by a taxpayer in his income tax returns. Specific desk audit cases can be referred for a field audit action, informed through a field audit notification letter. For a field audit is one that takes place at the taxpayer's premises. It involves the examination of the taxpayer's business records. In the case of a sole proprietorship or partnership, if the taxpayer's business records are incomplete, it may involve the examination of non-business records such as personal bank statement and more. A taxpayer will be given notice prior to a field audit. May comprise any of the following types, which are general compliance audit, special audit, and issue-based audit.
Assalamualaikum, my name is Rahilah. So I will be talking about the audit process. The audit process is generally conducted by the Inland Revenue Board of Malaysia, IRBM, which is the main country authority in this country. It involves the examination and verification of a taxpayer's financial and accounting records to ensure compliance with the country's tax laws and regulation. So there are 6 steps in the audit process. As stated earlier, there are 2 types of audit. This is actually the audit value, which are the desk audit and the field audit. However, for field audit, if there is no suitable business premises for the audit to be carried out, taxpayers themselves can suggest an alternative as per IRBM's agreement. Moving on to the second audit process, which is audit commencement. There are 4 steps in this audit process, which are notification letter, confirmation phone call, request to postpone. But this step is not necessarily happen all the time. But it's important to note that this option can be made available without receiving any penalty. And the last step is details of the letter. So on the first audit commencement step is the notification letter. This is like getting an invitation to a special event. This is where the tax people, which is the IRBM, will send you a letter telling you they are going to check your tax stuff. You get this letter 14 days before they actually come. The second one is the confirmation phone call. So before the tax people come over, they might give you a call to make sure everyone is ready and to confirm the visit. It's like a friendly reminder that they are on their way. So the third step is, which is the not necessary step, is the request to postpone. So sometimes life happens, right? If you have a good reason, you can ask the tax people to come at another time. It's like saying, can we do this later? Something important came up. And the last step is details in the letter. It tells you what they are going to look at, which is your tax records, who the tax inspectors are, which years they are interested in, and when the visit will happen, and how long the whole thing will take. It's like a guidebook for the tax event. Moving on to the third steps in the audit process, which is the visit. The audit begins with a meeting called an interview. In this meeting, the audit officers talk to the taxpayer to learn about their business and discuss on the audit. The taxpayer explains how their business works or how they keep records, and the person in charge of the records is also interviewed. It's like conversation to understand what's going on with the business. So we are on the fourth step in the audit process, which is the examination of records. So this is a critical process where the tax authorities review and scrutinize the taxpayers' financial records, accounting books, and other relevant documents to verify the accuracy and completeness of the information reported on tax returns. This examination is conducted to ensure that the taxpayer is in compliance with tax laws and regulations. So, the scope of examination is that tax authorities outline the specific records and financial information that will be subject to review. This may include income statements, balance sheet, supporting documentation for deduction and credits, or other non-business documents. The fifth step in the audit process is the audit time frame. The on-site audit takes only 1 to 3 days, but can be longer based on the business size, complexity, record keeping, and taxpayer cooperations. There are 6 keys in the audit time frame, and the last step in the audit process is the settlement of audit. After auditing, a report is made for approval. Taxpayers may discuss adjustment at IRBM's office. They can also visit for updates or to provide more info. If tax adjustments are proposed, a notification is issued and the taxpayer has 18 days to object. If no objection, it is deemed agreed and notices are issued. Settlement should take 90 days. If longer, the taxpayer is informed. Once settled, no repeat unless new issues or info arises for the same year. Taxpayer will be informed of audit findings, which are audit issues raised, reasons and rationale for raising the audit issues, the amount of proposed tax adjustment, if there's any, and the years of assessment involved.
Hello, my name is Alif and I will explain the selection criteria. Some of the bases used in tax audit case selection are as follows. Firstly, companies located in major cities such as Penang would be selected for tax audit relatively higher than other cities due to the city has a large number of listed companies and economic activities. For specific industry, specialized industries such as telecommunication are targeted for tax audits since they are developing quickly, vulnerable, and have multiple unresolved issues. Next, the hotly debated contentious tax issues such as withholding tax may be prioritized for tax audit as judgmental interpretation are evolved between taxpayers, IRB, and the courts. Then, IRB may conduct a tax audit on a taxpayer if there is reasonable suspicion of underreported business or rental income after examining the claim revenue expenses by another taxpayer. The fifth criteria is risk analysis. Information technology is used by the IRB to compile statistics on the average turnover and gross profit of all industries. Companies with wide discrepancies from this average would then be subjected to risk analysis. Lastly, the sixth criteria is taxpayer previous record of return. Late or non-submissions of tax returns increases the risk of being selected for a tax audit. The audit officer is required to adhere to the rules and code of ethics set forth by the IRBM in performing his duties, such as being professional, well-mannered, trustworthy, honest, and with integrity. Audit officer also must cooperative and is always ready to give advice and guidance to the taxpayer. Besides, they must be knowledgeable and fair in administrating tax laws. Furthermore, an audit officer is also prohibited from performing services such as having any personal or financial interest in the business of a taxpayer being audited. Moreover, recommending to the taxpayer to appoint a particular tax agent for the audit case and abusing his position or power in carrying out his duties as provided under Section 118 of the ITA. That's all from me. I will pass to the next presenter.
For the rights and responsibilities of tax agents. Tax agent is the taxpayer can request for its tax agent to be present during an interview. Second, the taxpayer is allowed to bring an interpreter to an interview or discussion sessions if the taxpayer is not conversant in Bahasa Malaysia or English. This is does and don'ts tax agents. Tax agent must be professional, be honest, trustworthy, transparent, reference from missing information. For don'ts, giving wrong advice to taxpayers, delaying the work, offering any forms of gifts to the audit officers. Does and don'ts for taxpayer. For does, be comparative, well-mannered, fair, honest, integrity, provide reasonable facilities, cooperate. For don'ts is giving any form of gift to audit officers, making any form of payments, obstructing or hindering the audit officers. I will explain assessment and penalties of understatement of tax. If it is discovered after the commencement and audit that there has been an understatement or omission of income, a penalty will be imposed under subsections 113 subsection 2 or paragraph 44b subsection 6 subsections b of the ITA. The penalty rate equal to the amount of debt under change 100% accordingly. The Tax Audit Framework 2019 provides the penalty imposed following a tax audit would be at 45% on the tax under change. Second is voluntary disclosure. Taxpayers are encouraged to make voluntary disclosure on any underreported or omitted income before a tax audit is conducted. It must be made before the commencement of a tax audit. Once tax audit commences, voluntary disclosure is not allowed. The concession rate of penalty for voluntary disclosure under Tax Audit Framework 2019 as follows. First, less than or equal to 60 days, penalty of 10%. More than 60 days but less than or equal to 6 months, penalty will be 50.5%. More than 6 months, penalty will be 30. Last one is provision of reasonable facilities and assistance. Sections 8B and Sections 8D subsections A1, the taxpayer is obligated to provide reasonable facilities and assistance to the IRBM personnel when they are carrying out the field audit in the premises of taxpayer. Failure to do so is an offence under the Act. Upon convictions, the offender may be liable to a fine of 1,000 to 10,000. Second, imprisonment for up to 1 year or both.